Hey traders, welcome back to part 2 where we're talking about MACD strategies and signals and ways to use it to get us into or out of trades, or use it as a filter. That's another cool way of using indicators, isn't it, right? We don't want to necessarily use it as a trigger to get in, but we can use it as a filter. So let's talk about the first way. So we talked and discussed how the MACD was calculated, what it was all about, the sort of signals it was firing off. Just to add in addition to that, go and check out part 1 by the way guys if you haven't already, the histogram is telling us the difference between the signal line, this is the histogram here, okay, that's giving us the difference between the signal line and the actual difference, the MACD, the actual convergence divergence line itself. So how do we use this, and what is it worth using? What's it going to tell us, or what it's not going to tell us? Okay, so the first general way that people use it, and this is very broad, and I'm just going to tell you exactly, kind of the criteria. Obviously, you wouldn't recommend going out there straight away and just firing off these signals, but understanding that these are the kind of things that it can do. So the first thing it's going to do is, as the signal line, or should I say the moving average convergence divergence indicator itself, the line itself, i.e. this one here, if I can bring it up for us again. So it's the fast length minus the slow length, giving us that difference. When that line crosses below the signal line or above the signal line, I highlight that with a drawing pen. In fact, you know what, let's get this into a full screen so we can see. Obviously we've got no price here, but you get the idea. When we get this kind of crossover point here, or when we get a crossover point here, that is when some people, we've got another one here, you can just see the crossovers here guys, just exactly when that blue line is crossing over that orange, burnt orange looking line there. That is generally considered a signal. Whether you want to get involved in it or not, again, it's entirely up to you. But the idea being is that momentum has kind of died down a bit. It's a little bit quicker than waiting for the moving average crossover. You can do that, and that's something a lot of people do. They'll wait until you get the MACD line crossing above 0 or below 0 and taking the signal on that. But that's going to be a little bit slower. When the signal line, when the MACD is crossing below the signal line, that's going to give you a little bit of a head start, a little bit more, a little bit of an earlier signal, because you're obviously basing it against a smoothing. So it's a good way of kind of giving you an idea potentially when the trend may end. Now, this is my caveat to this. I would be careful using it as a top or bottom picking indicator. As you can see many times, and if you go back and look at your own charts and stuff guys, you'll see this for yourself. You're going to see times when the moving average convergence divergence crosses below the signal line at the top of an uptrend, but it's literally just pausing, because all it's doing, if you think about the contraction and how it works, is that you're fast and you're slow just kind of catching up with each other. Doesn't necessarily mean the trend is changing, it just means that they're catching up with each other. As we've got an example here with euro, an uptrend here, bit of consolidation this period here, the moving average does a lot of crossing. In fact, it even comes down and crosses below the 0 line here, but in reality we've still come a long way, and you've got to be careful. You've got to accept it in the context of what it's giving you. So the first one we've got is the cross of the moving average convergence divergence with the signal line. That's something that you can look into and implement. If we scroll back over, you can see when we kind of get those signals, you get them at bottoms here, and it kind of gives us a little bit of a reversal signal at the top here, a little bit late, a bit grubby, but you get the idea. Okay, let's see exactly on this downtrend here when we kind of got this signal. So you've got it a little bit early here, and then you've got another signal here. This is when you'd be buying on you'd be going long as it crossed over there, and then whatever you use your stop, obviously didn't tell you what your stop's going to be, but you'd have to implement that based on your own risk management strategy. Okay, next one is number 2. Let's not dwell on that too long. Number 2 is crossing over the 0 line. Again, this is a real fundamental, basic, tried and tested way of getting involved in markets. Moving average, when a fast crosses over a slow, it's true, it's tried and tested. The trouble is, in range bound markets, it just screws you over. You need to get it ideally at the beginning of a trend. It keeps you in the trend. It's a good way of kind of picking out those trends, but it can be noisy. So what you're looking for is the the MACD to cross but above the zero line, and then you're going long as it crosses above the zero line and going short as it crosses below the zero line. Again, being very cautious of the environment you're in. Perhaps this is kind of a little addition. You could use it in conjunction with a breakout. So if you have a breakout in price and you want to get long, then you might look to get long as we crossed above the zero line. So here would be a kind of great example here. You cross above the zero line here, you've already broken out above your little miniature resistance here. You're consolidating, you're like, well, I've got the signal on the MACD, I've got the signal on price, you know, I'm going to get involved in it. So that's another way of that you could do it. And obviously there are multiple permutations. And guys, if you've got any comments about how you use MACD, then stick them below. Always interested to hear, you know, what your thoughts are on indicators and little clever ways that you perhaps have got, or you found success or not, as the case may be. We can learn from other people's trial and error. And the final one is divergence. So what is divergence? Divergence basically means that, listen, price is going to a new low, but the MACD is not. Here's a little tiny example of it here. We haven't got a brand new, real fresh low, and I'll pull up a better one in a second. But the idea is that, you know, if price is pushing to the lows, pushing to lows, and the MACD is pushing to lows on the first one, but then on, oops, let me just redraw that because you can't see it because it's gone off the screen. So price is pushing to lows in that kind of situation. MACD is not. MACD is going to lows, and then it doesn't go to lows on the low in price, then you're getting a divergence. So here, very shallow one. Let's look for a better one for you in a second, but very shallow one. You've got a new low in price here, but the MACD does not go to a new low. Okay, you've got a new low here. Yes, MACD is going to a new low in this area around here. Price goes to just about a new low here. MACD does not. That is your divergence. That would be an indicator that you'll perhaps go long on price. Let me find a better example for you on another chart. Okay, so I've got one up for you now. There's I found a couple of really good ones. Just picked a couple of the best I could see. So the divergence here, you got one on. This is copper, daily copper. You're coming down, and here's your low. You come down again to a fresh low here, so a new low in price, but you don't get a new low in your MACD. You can see the difference here. You've got this divergence at the lows. In other words, new low, yes. New low in price again, yes, but the MACD doesn't go to a new low. So what is that telling you? That's telling you that it's not as aggressive. Potentially, that they're running out of steam a little bit at the end of the move. Those kind of things that you can kind of insinuate from it. Again, I'm not a big advocate of saying, listen, just go straight in off the bat and hit that straight away with a long. But it's another kind of layer of edge you could add and say, hey, listen, the MACD has made a divergence at the lows here. You know, in other words, the moving average haven't stretched so much. Price has stalled a little bit. You know, other things you can try to take into context and then say, okay, well, maybe I'll take a long. Or vice versa. If you're looking to go short, perhaps on that breakout, you know, here, which is quite feasible. Let me make that a little bit clearer for you. You know, if you're looking to go short kind of on the breakout here, pretty classic thing, isn't it? Shorting a new low on a breakout if you believe there's selling aggression. Moving average convergence divergence doesn't go to a new low. Maybe it's going to make you stand back a little bit and say, okay, I perhaps want to pause, or perhaps I want to wait for a pullback after a break. You know, that kind of defensive play as opposed to being more aggressive and just hitting those bids as you push through the low. So anyway, that's MACD, guys. If you like this kind of video, give me a thumbs up. Don't forget to subscribe for more videos from me and other traders on this channel. Would love to know your thoughts on the MACD. It's such a broad, well-used indicator out there. What settings do you use? Do you find it on different time frames? And what markets does it work well for you on? Or what doesn't it work for you on? Equally as interesting to me and others. So leave your comments below and look forward to see you in the next video, guys. Keep your risk managed. Take care. I'll see you soon. Bye-bye.